An international station for an international city. This is Radio 3. Money Talk.
Good morning, this is Peter Lewis with a new week of Money Talk on Radio 3 on Monday the 20th of September. The time's 8:03 in Hong Kong. The moment of truth for troubled property developer China Evergrande has arrived after Chinese authorities told major lenders not to expect interest payments from the firm this week. On Thursday, Evergrande is due to pay $83.5 million in interest for a dollar-denominated note, in addition to 232 million yuan, that's about $36 million for a renminbi note. Signs of contagion are already visible in the financial markets. The 7-day repo rate, an indicator for interbank borrowing costs, jumped 14 basis points Friday to 2.4%, the highest since June the 30th. Some banks in China appear to be hoarding yuan at the highest cost in almost 4 years as they prepare for a liquidity squeeze, and Chinese junk bond yields hit an 11-year high Friday, printing at 14.34%. It's 8:24 on the phone from Shanghai is independent economist Andy Shi. Morning, Andy.
Good morning, Peter.
It looks like the moment of truth is arriving for China Evergrande this week. It seems like it's going to default on interest payments on loans, according to various authorities in Beijing. Andy, give us a sense, first of all, just how has Evergrande ended up in this situation, and what lessons should we be learning from this?
Well, Evergrande seems like its business model has been on ever rising debt to keep itself liquid, not on its earnings. So there are businesses like that in China. This year, at the beginning of this year, the banking regulator put the cap on leverage for companies like Evergrande. That's why it got into trouble, because it couldn't borrow more.
We don't seem to have learnt our lessons here, do we? We saw this in the financial crisis, the global financial crisis, when you had banks, I remember Icelandic banks, offering sort of wealth management products, current accounts at totally unrealistic rates, and then all had to get bailed out. It seems the same thing is happening here, except with a property developer.
Yeah, I think that the developers have been offering high interest rate based on the assumption that the land price would go up always. That's why it could afford a very high interest rate. And that cannot be the case always. So at some point the music stops.
And presumably the government's crackdowns on the property sector have accelerated that process for them.
Yeah, I think that the property market is really slowed in tier 2, tier 3 cities. It's still hard in tier 1 cities. So some cooling in Shenzhen already. But I think that the government at this time is showing determination to keep the property bubble under control by capping the debt, the leverage for developers without ever increasing debt. The land market could not rise forever. It's really debt driven.
So if China Evergrande does go and default this week, as appears likely, what happens next?
Well, it's the government has dealt with like Anbang and HNA. These companies were unwound by under the government control. Basically, the government would take over the company and will sort through all the assets, and then what could be sold, like the housing projects, for example, and the Evergrande would be probably given to other developers to complete, because the home buyers need to get their homes. That's important for social stability. But in terms of financial side, it will be sorted out over time. The government is unlikely to make the whole for creditors, for lenders. And the government has not given out money to lenders on behalf of private companies before. So I think that the lenders have to accept the losses.
What about those people, those individuals, retail investors who bought the wealth management products? Were they going to be protected, or will they have to take losses as well?
No, they were not. You looked at the same thing happened many times before. In the previous big case was P2P. about $1 trillion, over $1 trillion was lost. Now people got into these high interest rate Ponzi schemes, and it collapsed and they lost their money. There were protests, but the government will not cough up just because there are protests. So I don't think that the retail investors would get their money back, because you bought a product that would pay you double-digit interest rate, and there got to be a catch somewhere, you know.
Yes. So do you think this can be dealt with without causing contagion to other property developers and spreading more broadly across Chinese financial markets?
Well, onshore, yes. The government is good at preventing something like this from snowballing, because the government controls the financial system. So you cannot, the lenders cannot seize assets and liquidate it and then drive down asset prices. So that's why China hasn't had a systemic crisis yet, because of the government's control over the financial system. But this time it's a bit different, because there's an offshore component. The property developers borrow tons of money in Hong Kong, in bond market. It's obvious there are hundreds of billions of dollars of bonds are listed. They also borrow a lot of money from these lending funds. This industry in Hong Kong has grown enormously over the last 12 years by over 10 times, and their customers are really property developers. They lend at a double-digit interest rate, under the belief that Chinese property market would always go up. And the government will ensure it will go up. And when push comes to shove, the government will bail them out. Let's see this time. I don't think the government will bail them out. So what happens to Evergrande is that Evergrande doesn't pay. The market may reprice the risk. And that makes it very hard for other developers to roll over their existing dollar debts. And so when coming due, they would have to pay up. So there will be enormous pressure for these guys to liquidate assets onshore to pay off these offshore liabilities, and that could mushroom into something bigger over time.
Andy, thank you very much. Sadly, we've run out of time. Love to talk to you more about this, but that's very interesting thoughts there from Shanghai-based independent economist Andy Shi.
You're listening to Money Talk on RTHK Radio 3.